Hello friends, today's video is about crowdfunding. As we know that crowdfunding exploded onto the internet a few years ago. Since then, early platforms like Kickstarter and Indiegogo have seen hundreds of new crowdfunding platforms emerge onto the scene, fueled and transformed by New Jobs Act. Now we will know what is crowdfunding. So as the name suggests, this is all about engaging the crowd to co-fund projects and startup ventures. Funding can be provided by tens, hundreds or thousands of individual investors as well as institutional investors and their conducts. They come together to provide the money needed to get an idea off the ground, complete production or finance the next stage of growth. There are three main types of crowdfunding. The first is donation-based crowdfunding. Modern crowdfunding began with donation-style platforms like Indiegogo and Kickstarter. Those with money contribute to various ventures which use that money for creating product and financing ventures. Contributors often get something tangible in return, such as being the first to receive the product. The second type is debt crowdfunding. Debt crowdfunding is still very common for early stage startups. The most common example of debt funding are Lending Club and Prosper. They allow individuals to effectively act as private lenders and spread risk by pooling their funds to lend for a wider variety of needs. That includes car loans, startup business loans, debt consolidation and more. Investors are repaid with monthly payments. The third type is equity crowdfunding. These type of platforms do crowdfunding and startup investment opportunities for investors. This form of crowdfunding is most similar to traditional fundraising for startups, where you will trade stock for incoming capital. There are many reasons to crowdfund beyond simply gaining more money. For brand new ventures, crowdfunding is a fantastic way to prove your concept and gain social proof for later fundraising effort. It can create a sense of urgency for investors and attract larger angel groups to later rounds. One of the most underestimated benefits is securing early users, advocates and ambassadors who have a real financial interest in sharing and empowering your success.